Do you need a trading strategy that actually works? It's going to give you some direction. You have an idea where you're going to get in, get out, or take profit. Well, then you've found it. Please subscribe and hit that bell notification so that you can see our scanner that we stream when we trade. Also, give the video a thumbs up. We also have a Discord if you're interested in joining, link in the description. Rules for the VWAP strategy. Okay, this is gonna just be like the VWAP pop. What's gonna happen is you're gonna have a stock that sells off below the VWAP. It's gonna be going down, and then it's going to start curling up and going back up and getting bought back up to test the VWAP area. Now, the rules for this to work is it must be above the 9 EMA, and it also must be above the 20 EMA. Those are resistance levels, and if it's not above those levels in those areas, people and traders will not want to think that's very bullish, and they will continue to sell off or stay below those EMAs. Okay, this is how to implement the VWAP pop strategy. You need a good little direction as far as the open goes. So it's going to open. The direction here was down. It's nice that it was going into a whole dollar. However, you don't need that, but it's nice as far as for support reasons. Comes into this area, it curls up. I'm on a 1 minute chart because it's in a faster time frame early in the morning when the market opens. Comes up, breaks through this yellow dotted line, which is my VWAP. 9 EMA is gray. Blue is my 20 EMA. Comes up, taps the 20 on the 1 minute chart, pulls back a little bit, and then closes. That close at the top of this candle that broke through VWAP and held above and closed above VWAP, meaning above this yellow line, that is my decision candle. Okay, it's black and white. That is going to be your entry right there. Next candle to open and break above this one. You can go to the top of the wick if you want to, but wicks could be pretty long. I do the top of the body on this decision candle. I get in. I start in small. I would start in with whatever you're willing to risk, but your entry is here at 36.23, or even if you wanted to go all the way to the top of it, it's like 36.26 or so in there. Up to you. You can decide in that area where you're going to be your entry. But you're risking to the bottom of that decision candle. So this is almost, it's by the whole dollar, 36.03, 36.02, somewhere in there. And then your entry would have been at 36.22 or 36.26, somewhere in there. So you're basically risking about 25 cents a share in this example. So knowing that, if you took a $100 position, or excuse me, 100 share position, you're going to be risking about $25. So you get in, you're going to go probably about 50 shares, and then when this candle closes, you want it to close, you want all this to be technically above the 9, the 20 EMAs, but more so on a 5 minute chart. That's where it really matters. On this chart, you're below it, but it's not ideal because that's considered resistance. So just keep that in mind, be mindful of that. Next candle makes a higher high than this one, I would add. So 36.35, you're going to add again another 50 shares in this example. So now you're full size on 100 shares, and you should be roughly about 36.30 is your average. So I guess if you see it that way, you're risking your 30 cents instead of 25. But so $30 risk at this point. Stock takes off, rips up, you're now at, you hit a high on the next candle of 36.75. Let's say you were risking $30 in this trade. Well, you're already at you're at 1.5, so you're at almost your 2-to-1 ratio, meaning, or your 1-to-2, risk 1, win 2. You need 60 cents, so you need to hit the 90s. 36.90s. There it is in that second 1 minute candle. So you could have sold a half or 3/4, whatever you want to do, or you could have just held it. This is up to you, whatever you feel like your risk reward needs to be. If you're risking 1 to make 3, well then you need 37.20. This pulls back, 1 minute pullback on light volume. Volume's not very big on that. Drops down, gets right bought up from this small candle here, this pullback, and rips higher. All up to 30. You need 37.20 to be a 3-to-1. That's where you could have sold half or 3/4 of your position, whatever you felt necessary. And this thing rips all the way up to 37.41 area. Consolidates sideways for a little bit, pops again, high a day at 37.64. What a trade. After that, kind of rolls over a little bit, sells off, pulls back down to the VWAP, breaks below VWAP, gets bought up, and trades whatever throughout the day. And looks like it really sold off actually. Pulls all the way back down. But at least you know your trade and you know where you're going to be getting in and where you're going to be taking profit, where you're going to add if you want to add, etc. If you have any questions, leave them in the comments. I will answer them and I'll get back to you. Great trade. Okay, so here's an example of the 5-minute chart, the VWAP pop. So in the morning, it opens up, it flushes for the first half hour or so. See, that's 30 minutes right here, and it finally reverses. Now, also watch the Qs, QQQ, and watch the SPY. Those are the markets that I'd like to watch as far as to know what's going on with the market. So you got that flush, it bounces, it rebounds, comes up, it breaks VWAP right here. The yellow dotted line is your VWAP, comes up, sells off, or profit takes, whatever's going on. New candle comes up, pulls back a little bit off the top, creates that wick, and closes. This is your decision candle. Now also, keep in mind, be mindful of the fact that you have the 9 EMA, you have the 20 EMA, which the 9 is the gray, the 20 is the bluish line here. So the next 5-minute candle opens here, probably flushes a little bit, sells off, hits that 9, people buy it, all the traders buy it up right here, it wicks up, and then it closes up here. So I suggest that you get in right here at the top of this decision candle. That's my suggestion as far as starting to get into a trade. However, you can play where you take a small size down here off of the 9 EMA, or in kind of, or half of the decision candle if that's what you want to do. Your stop out will be, and there's no guesswork here, 319. So 319 is the bottom of this candle. Okay, you can give yourself a couple more, another dime if you want to. That's if you're thinking like the whole number, I don't want to go right to the whole number, they'll stop me out and then they'll just bounce back up. That's fine. Then give yourself another 10 cents, 15 cents, whatever you feel comfortable with, just below that candle. But understand, that is your stop out zone. Okay, so now you know when you're getting in, either, you know, the top of this decision candle, or maybe off of a 9 EMA, and then you will let the trade work. You will not over-manage the trade. You will not freak out about the trade because you're going to take on size that you understand, you know what you're potentially going to lose going into the trade. So don't go huge right off the bat and freak out and stop out before your stop. Let the trade work. As you can see, the 9 EMA crossed the 20. Now understand that these are lagging indicators and you're just watching volume down here and price action. what happened, and you can watch the price action in the level 2 charts. If you have any questions about that, leave it in the comment section and I can make a video on it. So as we're going and watching this trade play out, you're risking $2 to make what? Usually you want to risk $2 to make $4. So that's per share. So you get in, you average in. We're at 385 or so right here, and it looks like it goes up, pulls back, goes to a high of 325.47. You had no indication in here to ever have to stop out. Look at the 9 EMA trending up, look at the 20 EMA trending. They're all trending. Nothing here is making you want to stop out. If this goes up, it pulls back. Look how low the volume is. Take a look at the volume chart and see. You want to see very low volume on the pullbacks and high volume on the pushes. That's another good way to read it. If you guys got any questions about this, let me know in the comments. So your first profit target area is going to be $4 roughly above this 385. So let's call it 24.85. So when it got to 24.85, you're almost at the top on this trade. You took your profit at 24.85, at least half or maybe 3/4, and let the rest ride. Then you let the remainder of your trade, whatever shares you have left on the trade, you're gonna have those. You're gonna stop out either below the 9 EMA, which right here, this looks like it would have probably wicked you out right here on this one. You would have been out. Or you can even take it as far as the 20 EMA. Once it breaks below that, that's kind of a bearish sign. And as you see, this thing kind of starts downtrending in this example. So then you just basically take yourself out of the trade and sell off the remainder. I wanted to talk a little about risk versus reward. So first of all, the question you need to ask yourself is, what is your risk tolerance? What are you willing to risk? This is going to be determined by many factors, that being your account size, the type of trader you are, and what kind of stocks you're trading. Risk versus reward. Risking 1 to win 2. Risking 1 to win 3. Risking 1 to win 4. So the better your risk versus reward is going to show how much of a percentage of winning streaks you need to have. Like, do you need to win 70% of the time, or do you need to win 60, 50%, 40%, or only 25% of the time? Now, if you have a 1 to 6 ratio, meaning you risk 1, but then you win 6 when you win, you don't have to be right very often. If you're interested in learning about risk versus reward, let me know in the comments below, and I'll be happy to make a video for you. Thanks for watching. Please subscribe, hit the bell notification, and give this video a like. Also, consider subscribing to our Discord, link in the description. If you have any questions or comments, please leave them below. See you on the next video.